What is going on, everybody? And in this video, we're providing a state of the market and stock picks for December 29th, 2022. So that sounds like something you're interested in. Consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. Now, some data, like I said, there's been data that's been coming out, and two of the biggest things, again, I am watching are essentially watching jobs, seeing where employment is, watching essentially any kind of the housing industry in general, watching 30-year fixed loans. And today we did have some more information actually come out. The U.S. pending home sales fall for sixth straight month, declined by 4% in November. Consecutive month decline, much worse than forecasted of a 0.8 drop. The interest rates climbing, pushing pending home sales index to 73.9, lowest since 2001, excluding the drop in earlier months of the pandemic. So the whole housing sector is playing essentially to my thesis, right? Something we've been talking about, that we could have potentially hit peak back in March of this year. And then now it's just been a downfall since that point. Um, it's interesting. Nonetheless, we are coming to the tail end of the year. Obviously, we started selling off more. Again, it'd be really key tomorrow if we can hold roughly that 37.65. This has been a support, low volume. You're not really going to have a lot of big moves coming into today. But the market essentially just tanked today. It turned over and continued to sell. The bounces are very weak. It's really a combination of low volume and what people are really anticipating for 2023. Again, big tech, Tesla actually held somewhat today. Apple absolutely got obliterated today. Again, big concerns because of Micron that we saw last week and the chips and the issues that they're having, and not understanding what earnings may bring. So it's not to say that we can't have an earnings rally, something I have been talking about. But the thing is even if we do get a pump, I think it's essentially following a cycle. I don't believe there's anything behind that pump. Essentially saying that when earnings actually come out, that they're going to expose a lot of weakness in a lot of things, and we've seen that over the past two earning cycles. Things have been really exposed and dipping into cash. And a lot of companies and your big juggernauts in the different spaces are suffering. And so market caps are getting absolutely obliterated. I think you're going to see a lot of that going into next year, at least the first half of the year. And then I can potentially see some sort of pivot after some sort of cataclysmic event between now and July. And then at that point, that event will put the final nail in the coffin for us to recover. I think the market could recover by then. I think the market could turn. But I don't think that's going to be the ultimate pivot for the Fed. I think the Fed will continue to hold rates at a high rate, which will absolutely impact the market more so and hurt the market. But yeah, I understand the more layoffs that are coming. Even Google has been brought up about the layoffs that are coming for Google. It's another more information today that was coming out. So tech is getting beat up, and all you have is banks just holding and not really giving foot, maybe waiting for earnings. BA value is the same way. Again, banks, financials, and value have essentially pulled the weight for the last 2 years for any kind of rallies that we've had. And not to say that tech didn't play. Tech had a couple cycles in there where it tried to come back, and then as soon as we realized that inflation wasn't under control, they died back down, and now we're really seeing these tech stocks get absolutely destroyed. particularly Tesla is down. It's down to 111, and then Apple's down to 126 today. But again, tomorrow, very interesting. Do we head back down now to 3,600? Right now, it looks like that's where we're headed. I don't know if that's what we'll get. Again, there's low volume, and with what Powell had said just 2 weeks ago, is still weighing in on a lot of things, and we'll see if we do reach 3,600. Again, last time we were at 3,600, we played around with that for a while. Played around with the 3,600 for minutes, and then we get this huge spike down to 3,500. Only see massive institutional buying that pushed us up for the back half of the year. Now we are slowly dying off, and potentially even more, again down to that 3,600. So our institutions going to be down at the 3,600 is the question. Goldman Sachs have talked about they are looking at essentially a 3K drop coming up, whatever this crisis is. And again, for me, it really just depends. Like I've talked about the timing, it really depends on what actually happens. I could see potentially 32. I think 3K is a lot. Typically, a lot of these analysis are kind of overdone, in my opinion. And then they come to find out they don't come that close. The projection isn't that close, but they would like to overcompensate as opposed to actually be on par. And then things, you just strive for more selling perhaps at that point. So I think going in the next couple of weeks, 3,600 is something you're definitely going to have to watch and see what happens there. Do we get institutional buying around 3,500? Do we drop down to 3,500 is the question. If we can remain above 3,600, I think we could make a lower high, potentially start grinding our way back up again until that event occurs, and then we'll see what happens from there. But not to draw this out too much, Bitcoin, again, still holding the same. To keep reiterating a lot of these is hard because, again, nothing's going to move the way the market's already going. The dollar is still holding. I don't like the fact it's consolidating. Normally, on any other given day, you typically would play this and put a stop right underneath the 103. And then, you're looking at this consolidations building up for a big move. Well, the question is which way. But the problem is when you have multiple industries looking the same, normally that's typically a bad thing. That means there's a lot of fear in the market. So Tesla, again, completely getting obliterated. Try to pop today and then right back down to 109. I think this thing just continues to sell off, breaking 100 very easily. Again, my next zone is roughly around the 88. We'll see how we get down here. Not the greatest of supports. We've blown through a lot of the greater supports at this point. So we'll see where Tesla ends up here. But nonetheless, we aren't getting any bounces. And again, I've talked about this. The further you get away from this daily EMA, the 20 EMA, once it does actually bounce and it reaches that, it's going to get rejected very hard. So again, something I'm watching very closely. Aapl absolutely wrecked today. Be interesting to see what happens here as well. We've broken a good support, which is roughly sitting here around that 130. We broke that today. Do we retest 130 and then continue to dive is the question. So looking for that 130 retest tomorrow. Again, low volume. Have to see certain stocks are holding have a lot of volume. For the past couple of days, it's not the general index itself. Apple pretty much pulled down the general index just off of the move it had today. So interesting to see if that does rebound tomorrow or not. BA is another big one. Again, it's just hovering, trying to break 200. Very overextended. Just waiting for that correction or the other foot to drop for this thing to tank. Strong support at the 176. So watching that, even if we dive down here, you should get a nice bounce out of here. Question is it going to be just a brief bounce and then dive or not? So watching that closely. JPM, again, barely holding on the 129. This thing is just flirting with this 129 and waiting to snap, just like value is, when they're waiting for that drop. Right, if it does get a drop, but on a 122, greater support at 118. So when this does give way, you're going to at least get one big drop, and then you should hit support. So we'll see what happens there. Goldman Sachs, again, it looks like it's already broken, is retesting this support down to the next support, which is roughly 325. So tomorrow could be really bloody, just depending on waiting for these banks. None of these have volume, and so that's why these kind of are like slow bleed outs. Once we actually start getting volume in here, it'll be interesting. Bank of America's pretty much dead, especially after those comments. It's be interesting to see again how things are affected moving forward. But again, I don't want to make these videos too long. There's just a lot of just waiting for the new year. When the new year comes in, you get full volume again. We'll see if we'll get the Christmas rally. We'll see what new information we get. We kind of already know where the Fed is at. That was we had a lot of questions coming into this new year, what it would be, and this is what we got. So we're going to have to see how that does play out. But nonetheless, we still got 2 more days this week. We'll play the volume, see what happens. In my opinion, I'm shorting every pop because we do have initial jobless claims tomorrow as well, so that might have some influence, maybe more fuel to the downside. That sector hasn't been looking great as well either, but it's going to have a lot more weights, especially because we're trying to gauge the consumer. So keep an eye on that, and we'll see what happens. So have a great evening, great day, wherever you're at, and I'll see you guys later.